Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's Thursday morning, which makes it, for this week at least, the last trading day for the week. Tomorrow, of course, is a market holiday. Overnight, lots of action, mostly on the downside, though. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant with me, my colleagues Nigel and Surabhi. Guys, hi, morning.
Hi, morning. And there's some happy decoupling because Wall Street was on the downside, but Asia is fighting back. Asia is on the upside. Got a 3-day weekend ahead, and I think Sunday is going to be special for Nigel, waiting for all the Easter festivities as well.
We're looking forward to the long weekend, and Easter for me as well will be special. But we've got our hands full this morning, right? Yeah. You've got tepid global cues, the Nasdaq pulled back a goodish bit. Powell's comments is something that we need to take on board as well. But as Surabhi said, Asia is not looking too bad, and India has been outperforming. Let's hope that continues.
Absolutely. And so the Powell comments were front and center, and we will play out exactly the sound bites. But it was pretty cool. You had the former RBI governor, Raghuram Rajan, sitting down with the current US Fed chair, Jerome Powell, and there was that Q&A which happened. There was a speech, and then, of course, there was a sit-down fireside chat. So this is essentially what Powell said. The Fed is not in any rush to cut interest rates. That was broadly the message, in one line. And as I said, we'll play out sound bites, etc. So the market kind of read it to mean that there is no Fed put. And it doesn't look like there is a Trump put as well with regards to stock markets. Maybe for bond markets, yes, but not for stocks. And of course, we have the Fed chair now saying that he's not in any rush to cut rates, both on the employment front and the inflation front. I mean, the dual mandate for the Fed, they're not very clear what to prioritize on because things are in a bit of a flux. And of course, he also kind of spoke a little bit about the impact of tariffs on higher inflation, slower growth, etc. I mean, of course, all of it pointing to a slightly tougher environment macro-wise, and markets did pay attention. So, I mean, the S&P 500 hit an intraday low near the 5,220 level during the Powell speech and ended the session at about 52.75. And now, one big reason why I think the markets behaved the way they did, of course, the comments mattered, but liquidity was thin. And that accentuated the price action on the downside for US. And the reason why, of course, liquidity is thin, of course, is the fact that, it's a holiday-shortened week in the US as well. In any case, after the massive volatility up and down, people were not very sure what to do. So liquidity was running a little low as compared to the last 30-day or the 6-month average. And of course, yesterday was particularly the case. So the changes, you must keep in mind that it was a slightly low volume session. Many countries observe holidays, India included. That is tomorrow. Of course, the US as well, Good Friday. Friday to Sunday is the long weekend. And I think, this thin volumes is going to be a factor for most markets. Macro markets, 10-year yield was down about 5 basis points. Dollar index about 1% lower, 0.92 lower. And of course, oil prices came up a little bit. We're back at about $66 on the Brent for oil. So just to kind of tie in the levels, really, you basically have the support for the Nifty, which comes in at the 40-hourly exponential average. 23,030 is that number. The resistance zone, the important resistance zone, which we put out yesterday in the afternoon as well, 23,650 to 23,870. That is the zone for the Nifty on the upside. Bank Nifty support, again, comes in at the 40-hourly, which is 51,690. And the resistance here comes in at 53,650. We've had massive moves last few sessions. Tuesday was great. Yesterday, that is Wednesday, was very, very decent. And of course, we have a bit of a knee-jerk reaction in Wall Street on the downside. We perhaps react to it a little bit, but remember that point about low volumes, in a way, sort of exaggerating price moves as we go into the 3-day weekend. Gift Nifty will come up on your screen, gives you a quick sense of how we're likely to start. Not bad, about 50 points in the red. Surabhi.
I wouldn't be surprised if this also changes, and by the time we open, we see a little bit of green, just because Asia is so strong this morning. Asia is completely shrugging off the declines on Wall Street. You could argue part of that is in the price, because this NVIDIA news hit us yesterday. We knew that NVIDIA was down in after hours, so a lot of the Asian markets were already reacting negatively. And for whatever reason, for whatever it's worth, Asian markets are not, getting too perturbed by Mr. Powell's comments, where he's basically saying that he will be waiting a while longer before deciding on the future course of policy action till there is more clarity on what's happening with inflation. For the time being, actually, the rise across Asia is looking very, very smart. The Hang Seng is up 1.25%, as we can see on the screen there. The Japanese market is up about 0.8%. Singapore is again higher by almost close to 1%. Korea this morning has left interest rates unchanged. So there's, a lot of policy action underway in Korea as well. On Japan, I just want to talk about the fact that now it's all about negotiations. And maybe that's another reason why markets are higher. They're holding on to hope. Major Asian economies are all geared into this negotiation phase with the U.S. And this is what Trump said after the meeting with the Japanese delegation. He said, it's been a great honor to have just met with the Japanese delegation on trade. Big progress. So let's see what eventually comes out of it. There's export-import data out of Japan this morning, which is, telling us that the tariff issues are beginning to hurt, because if you look at the export numbers, the growth is only 3.9% in March, which is substantially lower than February's number of 11.4%. You could also argue there was front-loading ahead of all this tariff drama. And remember, in March, the steel and aluminum tariffs, they had kicked in. But the rest of it and the whole Liberation Day situation is, of course, going to show up in April numbers. In South Korea, also, apart from the fact that there's been no change in monetary policy stance today in the rates today, the South Korean finance minister is all set to visit the U.S. next week. He's all set to meet up with Scott Bessent. So South Korea is doing its own share of deal making. That's going to be in focus over the next couple of days. Today, because the dollar in general is trying to pull back from beaten down levels, a lot of Asian currencies are fairly weak, which works well for these exporting economies. The yen is actually leading the declines. It's down about 0.5% versus the USD, but the South Korean won, the Singapore dollar, all these currencies are lower versus the USD. The DXY, of course, is trying to make some sort of a recovery towards the 100 mark again, which is why I'm saying that maybe by the time we start off, we might see some of this Asian positivity rub off on us as well. The flows picture has been very, very solid. Yesterday, again, we had FPI buying come through. FPI has bought stocks worth almost 4,000 crores in the cash markets. Domestic institutions have been unloading. They've been lightening positions, sold off cash equities worth about 2,500 crores. Beyond, of course, all the global headlines, it is earnings season, so lots of stocks in focus, earnings and non-earnings. I'll leave you with just three ones. Wipro. Numbers are weak. The guidance is extremely weak. Wipro is telling us that in the first quarter, the top line could actually decline by 1.5% to as much as 3.5%. And why is that? In the Q&A, Mr. Srini Pallia actually mentioned that. He went on to say that there are delays in decision-making and transformational deals, as well as discretionary spends could be hit. So watch out for Wipro. The margin picture is actually good. Margins are in line with estimates, and they've not fallen. Paytm, Vijay Shekhar Sharma is going to be foregoing about 2.1 crore ESOPs, but this is not out of goodwill. This is because they're settling with SEBI, finally putting to rest that ESOP matter that has been pending, with the regulator saying that as a major, decision maker and promoter of the company, you cannot be holding ESOPs. And he said he's not going to be taking on any ESOPs for the next 3 years. So Paytm in focus. And Angel One, just an example, when the market hurts, so do companies linked to the capital market. This space has done very well, but the numbers in Q4 for Angel One are extremely weak. So watch out for this stock as well. But Nigel, overall Asian Q is not too bad.
Well, that's right. It's going to be a test for the bulls. In the last three trading sessions, the Nifty on a day-to-day basis has ended at the high point of the day. We have a long weekend that's coming up. So today, that's going to be a bit of a test for the bulls. We have the Nifty weekly expiry that will play out, which will add some bit of volatility. And also overnight, the US markets, well, they were under pressure. Particularly, the Nasdaq was down close to around 3% or thereabouts. But it's a good time, actually, for the FIs to turn buyers. And in yesterday's trading session, we did see, they bought close to around 3,000 crores odd. Getting into this particular, getting into this series itself, there was an arbitrage that was going on. That was, they were selling in the cash market and they were buying in stock futures. Now, in fact, that seems to be turning around, because in yesterday's trading session, they sold stock futures and they bought in the cash market. So there's a bit of a reverse arbitrage that's going on as well. And the domestic flows, remember, they have come down a little bit. So domestic flows on a month-to-month basis, they did slow down a little bit. This is the core equity domestic flows. Though you need to keep in mind that the industry is sitting on ample amount of cash, close to around 6.7%. it's moved up by around 60 basis points, and the industry cash levels are at the highest since 2017. Net, it's a good thing that the domestic investors, domestic mutual fund houses are sitting on a good amount of cash, and the FIs have turned buyers as well. What about their positioning on index futures? Well, they're net short, close to around 87,000 contracts on the short side is what we have seen. The long short positions as well, 72% of the positions are on the short side. Moving to Nifty options data, well, we have the 22,450 call that was fairly active. 20 lakh shares getting added out there. Premium at around 57 rupees, which gives you your resistance zone. That's around 23,500 to around 23,550 odd. Important resistance zone up here. While the 20 DMA, that becomes the first reference point. Today, the bears will be counting on this level holding out. If you can get past this level, we'll see a bigger fillip towards the end of trade. And the Nifty Bank, well, it's got its work cut out. Last few trading sessions, it's been doing well. It's only 2.5% away from those 52-week highs. The Nifty is still a distance away, close to 11% away. And in the last 1 month or so as well, you've seen that the Nifty Bank is up close to 10%, while the Nifty is up only around 5% or thereabouts, telling you the kind of outperformance you've seen out there. And today's the IT indexes like to be under pressure. Wipro's numbers weren't great. There's a bit of a feeling that Infosys is going to be a little tepid as well, and the Nasdaq was down. So the heavy lifting will yet again have to be done by the Nifty Bank.
Okay, all right, absolutely. And banks have really risen to the occasion, so bulls will hope that continues today as well. Let's get you the equity call of the morning. Lawrence Belanco of CLSS says that following last week's market volatility, they see the majority of global and regional markets attempting to consolidate in new lower trading ranges, where the April 8 to 9 lows are now seen as support levels and the early March lows seen as resistance. He says the Nifty remains resilient, with the NSE bank sector providing leadership. And the stock level, he says they would be buyers of HDFC Bank. That's the HDFC Bank ADR, ICICI Bank ADR, as well as Bharti Airtel.